started recording. I started recording now. So good afternoon one more time. Happy Sunday to you guys, and happy Families Day for as many fathers and fathers to be that we have online right now. I'm just saying Happy Father's Day. And if you are still a child, and if you are still if you are supposed to be a father, you are still a child. Then if you are supposed to be a father, sorry, you are still your father's house. Then you know you are a child. You are not supposed to be responding to all the prayers that are being prayed out there. So you need to go and get married and become a father. So let's just start as soon as possible. Um, last, we've actually been looking at this all the analysis together, and the reason why I'm doing this, I'm doing this for two reasons. The first reason why I'm doing this is because of some people that have enrolled in its training. I have some students here, and in so doing, by the time they join this webinar that I am making right now, they usually it helps them to understand what is being communicated in the flow of the training. So they are able to see the practical example of what they have learned in the training. Then the second reason is because so that, by the time we start trading our own life account, by the time we go to the market, we start seeing how professional traders look at the market. You'll be able to understand what is it that they used to look for. How are they able to understand where price is going to go in advance, even before it gets there? And then you also be able to link them together and get your entry. In the past couple of days, if you follow the last week webinar, you see that price was actually going exactly as it was predicted. We made mention of the fact that there are possibility that the dollar index will still be gaining strength, and that if dollar index gains strength, which is what you can see right now, that if dollar index gains strength, then Euro USD and GDP USD are supposed to be selling. And so we look at all the different major pairs. We actually concentrate on major pairs, and we are able to understand what flow, what we expect should happen in market, the flow of the market. So it's the same thing that we are just going to continue. All this while I've not actually been chance to be doing the webinar, but I think right now I have that opportunity, especially at this period of COVID-19 where we are still at home. So it gives me much room for me to even do this analysis regularly. And very soon also I'm going to be extending it to live trading session. Live trading session will involve me being online almost throughout the New York period, the session of London and New York period, where you'll be able to see how I'm going to be taking the peaks, the entries, how I'm able to be giving the how do I give the signals, how do I get the entries, how do I make the exit, how do I manage the trade. The most important thing of all is actually trade management. There are lots of times that traders do take trades, and they start getting scared. They close their entries, they close their position out of fear because price is just moving slightly against them. It's just because you don't understand trade management. So part of the things we are going to eventually be doing later on will be live trading. Somebody is saying no audio. Please, can you confirm if you can hear me? Someone is saying no audio. Can you hear me, guys? Are you guys there? Okay. 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 So I guess the only time I'm going to respond to no audio is when I have 2 or 3 people saying no audio. So if it's just one person, I'm just going to ignore. So if I have 2 or 3 people saying no audio, then that's when I will then respond. So we look at the market together, and we're able to understand what exactly we are expecting to happen in the market. And this right today, we are going to look at the market together too, and then you will understand that price just doesn't move because by random or by chance. There are reasons why price moves, and the professional traders, the banks at which you guys are trying to trade against, they understand where market is going way in advance before they even decide to start taking trades, and which is what you two need to also try to understand. I guess I've not opened some MT4, I'm just trying to open them right now. So in the meantime, when they're opening, let's just quickly go back to our chart of dollar index and look at the review of what has happened last week and the previous week, and then we can use this to have an understanding of what we should expect this week. Now, I can understand that there are some people here too that are relatively new to Forex and they have just joined me because they saw the link in the group or somewhere else. If you don't have a good understanding of the Forex or if you are just new, I would like you to just not disturb the flow of the class. Just go to Club 9 Forex Academy. You'll be able to see a whole lot of Club 9 Forex Academy. It contains all the different training sessions where you can get to learn about Forex from the beginning to the end, starting from the Forex beginner course, candlestick formation course, chart patterns, Fibonacci, LS wave, oscillators, market structure, volume spread analysis, pivot point and money patterns, price action trading course, and pro trading course. So I'm just going to try to quickly just try to quickly log in there because there are some videos that I'm going to be referring to when I'm doing the webinar. So especially when I want to talk about some of the harmonic patterns like the crab and butterfly. So just but if you are relatively new, just go there, and all these ones that you can see from the beginning to the end of this place, Forex beginner course, they are free. They're going to let you know what Forex is, the Forex market, currency correlation, etc. And the interesting part of it also is that there are quizzes at the end of each period. So when you finish the Forex beginner course, you can go to the quiz part and then try to answer some of the questions. And if you're able to get about 90, I think about 90 something percent or so. Mine, in my own case, I was the one that set all these questions. I'm only able to get 98%, you can imagine. So that means that all the questions, I think I missed about one or two, maybe most likely, I just wasn't in a good train of thought as at that time I'm answering them. So if you keep on answering, you'll be getting to see this your progress chart, and then you get to see the overall grade points, then also the progress weighted average. So I'm not really going to talk about the academy right here, but I'm just letting you guys know if you are new to Forex, just go there and register for free. Then if you want to access the premium videos, that's only when you be required to make payment. So I can also see no audio from about 2 people. Is it correct? Is the no audio correct? Is the no audio correct? If you cannot hear me, if one person can hear me, then it means the problem is not from me. If at least one person can hear me, it means the problem is not from me. So most likely, you have problem with your internet connection or you have audio settings. So okay, if as long as one person can hear me, then it means the problem is not from me. So let's just continue. So we are going to try to, this one doesn't have anything. I don't know why it's not coming up, but I can still use it from an analysis, so to say. Then this is where I have my index chart. I'm also going to be using this one for the analysis. Okay, so dollar index. So this is what has happened so far in the dollar index. And the last time, let me just quickly press Control Y on my phone, on my system, so that I can know exactly where we were last week. Okay, last week, this was where price was. This place was where price was last week. It started here. So that means before we had, as at the last webinar, this was where we were, and then price went all the way down to this level. Then eventually it went up. So like I said before, you are not going to know exactly what is going to happen in the market, but you can use what has happened in the past to try to have an understanding of what should happen next. So right there, dollar index first came down, That's why you see that there were retracements in the Euro USD and GDP USD, which I told you guys to watch out for. Then after that, it started going up. I'm still getting to hear. I can't hear. No audio. What could be the problem? Okay, somebody is giving the suggestion. If you can't hear, leave and come back again. You should be fine. I guess sometimes it can be internet connection, and sometimes it can be the fact that you are not really doing your audio settings well. So what I just need you guys to do is that when somebody is saying no audio, can't hear, if you can hear, just put that I can hear, or the audio is clear, so that I won't be distracted with the can't hear, because I don't want to keep on talking when I know that some people cannot hear me. Okay, so this is what happened last week. Last week, dollar index came down, then it went up. So with that, let us go to our Euro USD chart and try to find out exactly what happened in the Euro USD and how we were able to trade it. Now, I'm going to also press Ctrl Y on my Euro USD, so that it's going to give me exactly where we were last week and the previous week. So go to the 15 minutes time frame. I think this one is good right here. So what you need to understand is that at the time that dollar index was going down, that is why you see that Euro USD was doing this up movement. Then as at the time that it started going up, that is why you see that Euro USD started going down. If you go to the GDP USD too, you see something similar. In fact, GDP, I traded more of GDP USD than Euro USD. So I'm going to put this timestamp there, and you will see that as at the time when dollar index was going down, GDP USD was making this correction. Then after dollar index started going up, GDP USD then started making this down movement. So if you're able to, even if you don't understand the structure on GDP USD or Euro USD, if you're able to understand the structure on the dollar index, it can give you an understanding of what you should expect in the GDP USD and Euro USD. So what I did eventually during the trading period was to do this. I drew this trend line, or lower trend line, and also the upper trend line. So it gave me an idea of where to be looking for my sell opportunity. Now, immediately I took this trade. I took this trade somewhere around here. Then price first went against me. So I was like, does it mean that I was wrong? So my TP level, my invalidation level was actually around the pivot day. There was a pivot point. I think weekly pivot was somewhere around here. And so I was looking at this level, that if price breaks above this level, that means that is when the structure has changed. But price got to just around that pivot and started consolidating, giving me the assurance that we are indeed going to start going downward. And eventually that was what happened. It gives roughly around, maybe somewhere around 90 pips or thereabout. My target level was around here. Then if you follow through the flow of what we have done so far before, you'll also be able to see that we have been analyzing the GDP USD from the beginning of the up move right here, where we were having a divergence flow around here. Let me just take this out. Where we are having a divergence flow around here. In fact, it was not even from here. From the beginning of the whole analysis, we've actually been taking it all the way from this point, where I told you guys to be looking out for the possibility of price breaking out from this triangle, in that the fact that we had an impulse, then we are making a correction, then after that we're supposed to have an impulse. Then when it goes to this level, we start looking for the possibility of this down movement. So I'm going to try to expose some of the things that you need to look out for when you are doing your live trading, so that you are also able to get inside the trade at the best price. Now, as you can see that I have some indicators installed on my chart, but whenever I'm coming to do trading right here, I don't usually try to talk about any indicator. The reason why I'm not even mentioning about any indicator is because I'm not here to sell indicators. I'm only here to try to explain how to approach the market as a pro trader to you guys. And as you can see, we have a divergence indicator that has given us an entry level around here, letting us see that as price was moving up, the momentum indicator was actually slowing down. I mean, it's doing the reverse of what price was doing. So it means that you should be looking out for the possibility of price reversing from that spot. Now, if you're able to take your entry around here, where are you supposed to take your to put your target? If you go through the course, you'll be able to understand there's a place right there where it is mentioned how to identify the possible areas for your target. Now, you'll see the flow that as price was moving up in this manner, what happened right here? It made a pause, rejected it, then went up. So if you are going to be taking your trade around this spot, the level at which it made a pause before making the final movement will be the ideal place where you should be looking for your target, the final target, so that you don't leave a whole lot of profits, a whole lot of piece on the table. I won't lie to you guys, it's usually very, very difficult getting to make money out of the market. Now, when you are inside the trade, one big mistake you are going to be doing is to be closing your profit quite too early. You need to be able to identify the level at which price is supposed to get to and try to milk. I'm using Forex traders terminology right here. Try to milk the pips as much as possible if you are inside the trade. So a whole lot of you will have taken the sell around here, and you would have closed your sell around here, only for you to then start seeing this that price is going down. Immediately you see that it keeps on going down, you want to enter another sell right there. It will then move it against you, and then you feel that you were wrong, that you entered your trade at the wrong price, only for you to then see this. It's because you have refused, or you do not know how to really identify where price is going to get to, the level at which price is going to get to before it turns around. So when price is making this kind of movement, we call this wave 1, 2, 3, 4, and 5. So if you go through the training session, which is, I'm saying this because there are some students right here, and they may not really be able to understand when they are taking the trade in real life market. So at the time that price is making the wave 5 and it's flushing down in this manner, the best level at which it's going to be getting to see a support is the beginning of wave 5. That means the end of wave 4. That is usually where you're going to get to see that price is going to get to, then pause, possibly then making this an A, B, then C correction before we can then start looking for a new trend. So if you are not even if you don't even understand Elliott wave terminology and all that, sometimes all you just need to do is to try to understand the price action flow. Now, with this one right here, price made this high, made this low up to this point. Let us assume that you have taken the trade after the retracement. That means you were not able to get in the trade from this point, but you are looking at this consolidation zone and you want to take your sell here. How do you know where exactly price is going to get to so that you don't possibly go out of the market and leave a whole lot on the table? All you just need to do sometimes is to understand the fact that in Elliott wave terminology, I don't even want to talk about that Elliott wave right now, but I know that we have a zigzag formation right here. This is the wave A, then wave B, and this is wave C. So by price geometry, wave A in the zigzag formation is usually the length of wave C. So if you are going to be taking your trade somewhere around here, for instance, you're going to be taking your trade somewhere around here, for instance, and you can see that you seem to be in a zigzag or an ABC formation. All you just need to do is to draw, let me delete this. All you just need to do is to draw it from the low, from the high to the low that price have made, and take it to the end, to the beginning of the new swing that is going to make, and put it right here. And it's to give you an understanding of where price is supposed to get to before it then reverses. So with this, you are able to at least watch out for what price is going to do. And whenever you get to see some corrections, you can even add to your trade. If you go, let's go to the 1 hour time frame. Now, this is the 1 hour time frame right here. What majority of you guys will have done is that when price starts doing this, you immediately will have closed your trade because you are scared that this whole lot of pips that you have made to the downside is going to start wiping away. only for it to then do this. So ideally, if you understand price of action very well, you'll be able to see that this is actually a correction pattern. Price made an impulse, then it makes the three-wave correction, 1, 2, 3. Then it's going to be making the next impulse to the downside. So all you need to do is to start looking for your good entry around here to have to the existing position that you have right there. And by price geometry also, you'll be able to see that the length of this is going to be approximately equals to the length of this after price have finished the consolidation zone. So sometimes you can apply just pure price action. If you understand Elliott wave theory, it also makes it very good for you to be able to analyze, understand where price is going to even before it gets there. For me, I'm a dynamic trader. A dynamic trader in the sense that I understand Elliott wave, I understand price action, I understand harmonic patterns, I understand momentum divergences, I understand risk management, trade management. So I'm able to adjust to the different market conditions that I can see right there in front of me. For instance, right there, as you can see, the momentum divergence is giving me a divergence signal here that price may go up. Now, based on my understanding of the market, I'm not looking forward to taking this reversal because there's nothing here that has suggested that price is actually going to reverse at this point yet. No, nothing is saying that. So if you understand price action, you will know that you are only going to be using the indicators as a guide and not to be taking it because it has given you an entry for you to buy or for you to sell. For instance, divergences are only used for are only good for you to know where weaknesses are in price. That is when price is doing one thing, the momentum indicator is doing the other. So it's telling you that it is not being supported by momentum. It's not telling you that you're supposed to take the entry reversal at that point. As a matter of fact, okay, let me quickly also give you one guide, one good strategy, one good thing. I'm not supposed to do that, but it's no problem. If you enroll in the academy, those are some of the things I've explained there too. I'm going to go to the 4-hour time frame, and I'm going to try to look at where we had price reverse, and then we are going to try to go to the lower time frame and see how you can look at price action on the higher time frame, look at the candlestick formation on the higher time frame, then go to the lower time frame on the 1 hour or 15-minute time. I usually like going to the 15-minute time frame to look for my entry. We go to the 15-minute time frame, then you start looking out for reversal around that spot. So what I'm going to do right now is that I'm going to diagnose this area, this first area that we had where price rejected from right here. Then we'll go to the lower time frame and try to see what formation do we have on the lower time frame that will have given us an indication for us to know that we are supposed to take the trade around this point. 1 hour time frame. Now this is where I drew. This is where I drew that formation right here. This is a 4 hours. This is a 1 hour time frame. Let me go to 15 minutes time frame and scroll back. Now this is the 15 minutes time frame. So it means that if you are on the 4 hour time frame and then you saw that price was actually moving upwards, giving you a divergence around here. The momentum indicator is giving you a divergence, price was going up. So you are looking for how to effectively, accurately get your entry. So what you just need to do is to watch out for the price action on the lower time frame to confirm what the higher time frame is actually saying. So we go to the 15-minute time frame and then we try to see how is it going to be possible for us to pick the entry on that 15-minute time frame and where is our invalidation zone supposed to be. So I'm going to delete this right now and then I'm going to be drawing this. You can see that almost exactly what we had on the higher time frame is what we are having on this lower time frame. Price was given an ending diagonal reversal formation, which is the wave 1, the wave 2, the wave 3, the wave 4, and then finally the wave 5. So all you just need to do is this. If you draw this trend line right here and you want to pick this move to the downside, all you need to do is that if you miss this first one, you want price to break above this level before you want to take another entry for this kind of reversal formation that you can see right there on the 4 hour time frame, being an ending diagonal formation. You want price to break the top. Some of you guys will ask me, where is it good for us to be for us to take for us to sell this? You usually ask me once in a while, and I will tell you that allow it to break the top. Let it break the top and then reverse. The level traders, those that trade with support and resistance, are going to be looking at this place, and then they'll be looking for a sell around here. Their trading idea is not bad. It's just that they fail to look at price action the way they are supposed to look at it. They look at the rejection around here and they took a sell. Price went in the favor, then start going inverse, start reversing against the entry. So they feel they are wrong, and then some of them will not remove the stop loss, so it will hit your stop loss. And then you start feeling that price is supposed to go up. So the next thing is then start looking for is maybe price wants to go up. A whole lot of you guys used to trade based on support and resistance, and then you feel that this has broken the resistance and is now going to be doing it as support, and you're taking a buy here, forgetting the overall price action and market structure that is right there in your front, only for price then to come against you and give you and take you out at stop loss, or you are going to close it at loss. You become frustrated again, and you feel that the strategy is not working. No, it's not the strategy. It is you that is not really seeing the market structure the way you are supposed to look at it. You are supposed to look at the overall structure from the higher time frame, which is what we can see. All this that I drew with this red color is what is happening on the higher time frame. Meanwhile, what we are having right here as at this point is on the lower time frame. So with that, all you just need to do is to try to first anticipate. In my own case, I usually anticipate two reversal formations: the ending diagonal structure and the inverse and the shoulder pattern or inverse shoulder pattern. Those are the two common reversal patterns that you are going to be getting to see in the market. If you try to master those two things, it gives you a very good way at which you can be taking your entries at a very good and convenient level. Now, the other ones are the triple top, the double top, and which other one? I think triple top and double top, and maybe cup and handle and all that. But I have decided that, okay, for my own convenience, I will be focusing on the ending diagonal structure and the inverse shoulder pattern. Why am I focusing on these two? The reason why I'm focusing on these two is because of the market psychology. The market makers out there knows that a whole lot of traders are going to be trading because they have seen RSI giving them a sell entry, or they have seen MACD crossing and then 26 crossing 9 or whatever, and they're going to be giving them a sell signal. And so what we then intend to do is to first force price to make it look as if it's not going to do what it's supposed to do. So the RSI gives you a sell entry here, and then you took the sell entry, and before you know it, it's going to start moving against you. The reason why this is supposed to be so is because the market makers are out there to make money. Don't get it wrong. Any market, any business is established and set up to make money, and so it is your own assignments to be able to also make money with the market makers and not try to move against them. So if you understand the structure at which they used to cajole the market, at which they used to deceive the market participant, then whenever you see a sell entry or a buy entry, you don't just first jump at it. You wait, because you know that it has not completed yet. The people that will then lose money are those that are not waiting. Warren Buffett said that the forex market is moved, or how does it put it? That means the forex market, the money in the forex market is being swinged away from the impatient traders to the patient traders. So you want to actually be a part of those patient traders, understand the structure, and this is the structure that you can see right here. So how does the ending diagonal structure works? The ending diagonal structure will first break the top like a stop hunt. That means they know that a lot of traders want to sell here, and they're going to be putting their stop loss here. So they are going to then first hunt the stop, then force it down. So immediately you take your entry again, they will say force price back up again before eventually you start going in the expected direction. The normal count of that ending diagonal structure for it to be completed is a 5-wave move. That means price doing 1, 2, 3, 4, 5 before it then flushing down. So if you understand the structure, when price have gotten to the level where it wants to start turning, all you need to do is to first wait for the structure to finish before you enter. So if I'm going to be taking this trade, I'm going to go back to that one. I just want to use this as an example of a practical one. So if I'm going to be taking this trade right now, right there on my own live account, I will have first drawn this. I'll draw this and then I'll draw this. That means I'm telling myself that I'm expecting an ending diagonal formation. So I would have first drawn this, and I will expect that price is going to first go up, which is why I told you that the fact that I've seen a divergence giving me a buy signal doesn't mean I'm going to go with it. I'm going to first wait for the reversal formation to be completed. So the price is going to move in this direction, and I'm going to be watching it. If it's going to be, if you draw your Fibonacci and take it from this high to this low, you will see that it's going to be giving about 61.8 to 78.6% around this position, only for it to possibly then come down in this manner again, breaking this low right here, breaking the low. So if you don't understand the structure, you'll be taking the trade and you'll feel that you are wrong. Meanwhile, you are right. The buy position, the buy setup is right, but the timing is what is wrong. So if you don't want to take this trade, all you just need to do is to wait for it to break this low, come back to somewhere around here, then pick it up. Now, if you're going to be picking it up right there, you have it at the back of your mind that there's a possibility that price can still go up, then come down against you, which is why you see that when price have moved in your favor, we usually tell you to move your stop loss to break even. And then if it comes back to take you out, you want to wait for the next formation to be complete before you then take another trade set. Or that means you want to wait for possibility of price still breaking down furthermore before then moving upwards. So if you understand the ending diagonal structure is the best reversal formation for me, that let me take the trade setup at the market price where the risk is very, very minimal. So let's go back to, I think I'm even doing lots of training today than doing market analysis. Don't worry, this is my mood today. Maybe because it's Father's Day, so I'm just giving you guys Father's Day, what do they call it, gift or so. So if you want to take this trade, like I said, you need to allow it to break the top. If you take the entry here and it comes down and start moving against you, let it hit your entry and let it break the top again. Then by that time, you can start looking for your reversal formation. This candlestick that you can see right here is probably going to be I'm coming. Let me just quickly take out this. It's probably going to be the tweezer pattern formation, tweezer pattern candlestick. The only reason why it's not really giving the perfect tweezer pattern is because of this long wick. But if you look at the body of the candle, and the upper wick, they are giving you something that looks like a tweezer pattern formation. So this is going to be your one candlestick, the tweezer pattern, the two, and then the third candlestick to be 3, 1, 2, 3. Then you can look for your sell entry right there. Let's look at the next example on the 4-hour time frame, and then we'll see how we can also apply that by the time you want to take the trade next in the maybe tomorrow or thereabout. Now, price reverse here. Price reverse here. So we are going to go to the 4-hour lower time frame, maybe 1 hour, 15 minutes time frame, and see where would have gotten our entries and how we would be able to play, how we'll be able to flow with the market. Now, even before price did this, I remember I told you guys that you should watch out for the shoulder head shoulder pattern 2 and then 3, where this is issue. So even before price start reversing around here, if you understand price action, you'll be able to know that this is the neckline, and there's a probability that price is going to be rejecting this zone for a pullback before it then flushes it down exactly the way it did. So I'm going to diagnose this area too, right here. And I'm going to go to the 1-hour time frame first, so that we'll see the price action right there. And then I'm going to go to the 15 minutes time frame to see how would have been able to take the entry from that spot. Now, the same example that I explained to you is what we can write about. It's not exactly the same, but it looks very similar. So the way you are going to, let me just delete this one. No, delete, no, yeah. So the same way at which you are going to be trading that is what the other one I explained to you is what you are going to be doing right here. Look at what price was making. Price was making lower lows all the way to this point. Then it came here. Now remember that on the higher time frame, we have identified this area to be the neckline of the overall shoulder head shoulder pattern that we can see on the 4-hour time frame. So all you just need to do is to allow price to break the low. Allow price to break the low of this level. That means when price go up, they are not going to fall into the prey. That's what market makers want you to do. They want you to quickly enter the trade. Then after which they force price against you to make it look as if you were wrong before it then goes in the proper direction. So remember that I told you that there are two reversal formations that I usually watch out for, with the any diagonal structure and also the shoulder, edge shoulder, or inverse shoulder, edge shoulder pattern. Now, the reverse of that you can see on the 4-hour time frame is the same thing that you can see right here on the lower time frame. This is the shoulder, and this is the shoulder, and then this is the head. Sometimes it's usually very easy for you to see. So all you just need to do is that the first entry point where you need to be looking out for to take your trade is this level. That means you are going to be drawing your Fibonacci retracement tool from this low right here to this high right here. And I usually target the 127.2 and 161.8. Let me take this one to red and say set. So you can see that the price exactly reverse around the 127.2. By extension, you can get to the 161.8 then reverse. So this becomes where you'll be looking out for the possibility of you taking the entry. Now, if you fail to take that entry at that point, you don't need to worry. And your price is going to then be giving you an inverse shoulder pattern as it's giving you right here. All you need to do is to draw this line. I usually draw this line whenever I see that, okay, price have made a bottom and then there's a possibility of we having this move to the upside. I usually draw that line and wait for this pullback. If price fails to break below this level, then it gives me the confirmation of the reversal formation, which I can then use to take my entry. So it's quite very easy. Price doesn't just move by chance. There are no gambling in the market if you really know what you're doing. All you just need to do is to just take your time, get the skills, and go to the market, wait for the reversal formation to be completed before you then start looking for taking your entries. You don't need an indicator to tell you that you should buy or you should sell. I have an indicator right here, which is this RSI, giving me right here. I can decide to go for it. But even before it does that, I already have an understanding of what it's going to be giving me. So I don't depend right on it. The last one on the 4-hour time frame, let me take out this. The last one on the 4-hour time frame that we had the reversal is this area. We're going to go to the 15-minute time frame straight up, and then we'll try to see how we are supposed to have taken that trade. Now, for this trade setup, there's something that I have not really been talking about for you guys, which is the harmonic pattern that I use once in a while. And in my own case, I don't really need to plug in the harmonic indicator for me to be able to see that I have an harmonic pattern right in front of me based on my experience over the period. If I'm going to take my Fibonacci right now, I'm going to take it from this high to this low. And I can see that price is exactly at the 113.1% right there, the 113.1. Let me zoom in so you guys can see the 113.1%. Now, this immediately tells me that that is a possibility, that there's a possibility that price is going to be reversing around that spot based on the formation of the second variation of the sharp pattern right here, which is what I'm doing right here. So the sharp pattern right there gives you the perfect period and the perfect levels where that reversal may eventually take place. If you are not going to be basing your, let's say for instance, you don't understand, you don't know a money pattern, and you want to take this trade, you do not need to know a money pattern to take that trade. Another thing you can do is to take your Fibonacci and take it from this high to this low. And then you can see that price also has the 61.8% Fibonacci around that same spot. I'm going to set the 61.8% exactly around this place. So if price has made a swing high and is making a swing low and it wants to continue in the direction that is supposed to be for the pullback, the usual level where you should be watching out for is the 50%, 61.8%, and the 78.6%. Those three key Fibonacci retracements are where price usually retrace from when you want to start going in the trend at which it was before. So that gives me the second level, the second reversal formation I will have used to take that entry at that spot. The third one, which I'm also going to show you, is this. Price was moving in this direction. Price was moving in this direction. Then we have the probability that it's going to be going down. How are we going to have taken this trade without understanding harmonic patterns? It's also quite easy. If you look deeply, you will see that you have something that looks like, this one is very steep though, something that looks like that reversal and the any diagonal structure right there. You can see it. If you go to the 5 minute time frame, it will be very easy for you to see. Let's go to the 5 minute time frame and see if we can see. But if it's not going to be updating, let's just remain there. Let's just remain at our 15 minute time frame. Okay. So you can see that price also did that reversal formation 1, 2, 3, 4, then 5. Very easy. Then it flushed down and came down and started reversing from that spot. Only for it to come down to retest the area, then flush down. If I'm also going to let you see, so that you get to see that price, if you understand market very well, is actually talking to you most of the time. You are just the one that is not saying it, and it's not by magic. If you don't know it, you don't know it. I'm going to zoom it more, and you get to see that we even have something that looks like an inverse shoulder head shoulder pattern, sorry, around that spot. Look at this, and look at the head, and look at the second shoulder, and this is the neckline. A break below this level will give you the confirmation that you are looking for. This is going to be a correction pattern. That means price have made this wave down. Price have made this movement down, and it's only making a correction, 1, 2, 3 correction, then coming all the way down here. It's quite easy. I've not done all this analysis that I'm giving you guys before. I can just look at market and get to see what price wants to do. The next one that you may even use to get your reversal entry around this point is after price have made this retracement before it wants to go down. It's very easy for you to do. I think right here we have the Gartley pattern. The Gartley pattern is the 78.6 and then the 88.6 retracement. Let me take my Fibonacci from this low to this high, and sorry, the 61.8 and the 78.6. Let me take my Fibonacci from this low to this high, and I'm going to be setting 61.8 and the 78.6 for the Gartley. I'm possibly going to be using the orange right there. So the Gartley pattern right there shows you that there's a possibility of price actually retracing around this spot and then going down. So it depends on what you want to, the method you want to adopt. If price is actually printing signals, it's actually giving indications of what it wants to do even before it does that. We just need to try to exercise patience and have the knowledge to be able to do that. So now I'm going to go to the top of the day, which is GDP USD and what we expect price to do. So before we analyze the GDP USD and the Euro USD, we are going to go back to the dollar index chart, and then we need to find out exactly what we are expecting on the dollar index, and then use it to have an understanding of what we should expect in the Euro USD and GDP USD. So right there, remember that I told you that price usually does the same thing over and over again. It's just you that you are not getting to see them. Now look at the same any diagonal formation that we saw on the 4-hour time frame of GDP USD is what we are also getting to see right here. Look at how price is moving. Price is moving. The trader that doesn't know how to take trades rightly will be looking forward to sell. In fact, the people that used to get me angry the most are people that used to just draw resistance line and they are just looking for a bounce off around resistance, trading support and resistance. I'm not saying support and resistance doesn't work, but I'm saying that there are periods when they are going to work and there are periods when they are not going to work. So your duty as a trader is for you to be dynamic enough to know that based on this structure, support and resistance is not going to work. This one is what is going to work. So it's just like you are a farmer. You are going to the farm and you are only going there with your cutlass. Sometimes you need the hoe to actually do some certain things which the cutlass is not going to be doing for you. So you need to be equipped for you to have the different knowledge of what price may do, the structure that may form, and then know which to apply as at what time. So I can tell you categorically here that the support and resistance level is not going to work. It's most likely going to fail. The reason is because of this structure. Price in most instances usually break above this level, above this kind of structure, this kind of level, so to say. Price usually break above it. And if you go to the this is the 1 hour time frame. Let me go to the 4 hour time frame. So you see the structure very clearly. I'm going to remove all the lines. I think it's better now. Okay. So this is what we have on the 4 hour time frame. Price made this move to the upside, then it made this correction. Remember that it didn't break beyond this level. I'm not going to go into the detail of that one, but what we want to see now is that it made this move to the upside, it made the correction. Now, if price wants to actually keep on going up, and up, this is not how it is supposed to move. You don't need to understand wave analysis. You don't even need to understand the Elliott wave count nonsense. No, you just need to understand the way at which price moves, when it wants to trend and when it wants to correct. Now, in this case, if price wants to trend and it wants to give us wave 3, this is not how it's supposed to be moving. You can see that price is just moving quite slowly. It's not moving with the aggression at which you have in this level. It's not doing so. It's moving quite slowly. This is letting you understand that there's a possibility that we are actually going to be having a wave C instead of wave 3. If it is going to be wave 3, then price is going to be moving aggressively because the target level for wave 3 is that wave 3 needs to be minimum of 1 to 1.8% extension of wave 1. So if you take your minimum extension from that high to this low, it means that for it to be wave 3, price needs to actually get here for it to have been wave 3. But the manner at which price is then moving in this way shows you that there's no fire push for it to actually have gotten here for it to be wave 3 immediately. Maybe it's going to be doing that in this new coming week. We don't know. But from what we can see so far is that there's a possibility that price is actually going to still come down. That's what you need to be looking at that point. So if you have the understanding that, okay, because price is not moving in the fire force that is supposed to deal with the qualities of wave 3, I'm coming. Let me quickly go to this Elliott wave, and then you will see that there is something here that I wrote. I said wave personalities of wave 3 or C and wave 4. So you have there are expectations of what price is supposed to do. If it's going to be wave 3 or if it's going to be wave C, there are wave guidelines there. If you don't understand it, you start assuming wrongly. So we were expecting that price is going to be going up. You remember that nobody can really know what exactly is going to happen in the market. You can only make predictions. We identified this to be possibly wave 1, and then we are getting to be, this is possibly wave 2, and then maybe wave 3 will then come. When price now start doing what it did, as you can see right now, you can see that it is not moving with the firepower for the qualities of it to be wave 3. Then you get to start getting to see that there's a possibility of it being wave C instead of wave 3. So if it's going to be wave C, the same quality that we saw when I was doing that I showed you on the GDP USD 4 hour time frame is what you can then expect. You draw from this low to this high, where you had the first swing, and then you extrapolate it here to give you an understanding of where price may eventually get to for it to be wave C, not wave 3 this time around. So if you understand this, it will give you an understanding that price is most likely going to be breaking this top, So when you have an idea of price most likely going to be breaking this top, why will you then go to the lower time frame and draw one support or resistance line and then try to sell? It doesn't make sense. So with this understanding right now, we can go to, let me take out this, okay, I'm going to leave this one to be 127.2. The range for wave C is usually 127.2, and sometimes you can have it to be around the 113.1. So I'm going to set the 113.1 right here, and then the 113.1, 127.2, and the 161.8. Those are the 3 levels we should be looking out for if price is going to be breaking to that stop. So we can go to the 1 hour time frame right now and try to withdraw our price action. So I'm going to redraw this price action, which is what I drew before. We drew this, and then we drew this. I also drew this. And let me change the color of this one to maybe this, and then extrapolate it right here. So price is actually moving in a corrective manner. So there's every tendency now that we are going to first go up here, come down to this level. So we are going to be moving in something that may look like a channel formation, something that may look like price is trading within a channel, up to the point at which it's going to get to that level of 127.8 and 161, 113.1 or 127.2. So we may most likely be having this. We may most likely be having this price moving all the way down to this point, then coming down here to this area, then coming all the way up again, then eventually either flushing down from there or still pushing up furthermore, extending to this level, then flushing down. So with this now, we can then go to the Euro USD and try to understand what we should be looking out for. Remember that I said that the top of this one has not been broken very well yet. It's possibly that it's going to go up all the way to this level, giving you a perfect level at this support and resistance traders that will want to actually sell from this point. It will actually do active selling and then after some time move up again. So with this right now, we can go to the Euro USD and look for the price action there and our expectation of what's going to happen in the coming week. So this is Euro USD and we are on 1 hour time frame, but let's start from the 4 hours time frame. Now, the same thing that we saw on the Euro USD is what we're going to be doing right here. I'm going to be drawing a line from the low to the high, and I'm going to be taking it from that level up to this area to be extrapolating it right here. So this gives us an understanding of where price may get to before it then reverses, so that you start looking for the place where you're going to be getting the proper reversal formation. Now, for the proper reversal formation, I'm going to be taking Fibonacci from this low to this high, and I'm going to be setting the 127.2 and 161.8. The people under my training radar will understand this formation very well. It is going to be giving you something that looks like an AB equals to the CD pattern, C and then the D. But in this case, I see the possibility of D being an extended AB equals to the CD, where price is going to be reversing around the 161.8. This is the formation we have here under, I think it's under the harmonic pattern. Yes, the AB equals to the CD pattern right there. So we have the regular AB equals to the CD pattern, which is what we are going to be seeing right here. And then we have that there's a possibility of it extending, which is why you see that we have 127.2 to 161.8 of D level, 127.2 to 161.8 of D level. So the Euro USD that you can see right now, this is what has happened. Price came down, then did a pullback, and there's possibility of it getting the 127.2 to 161.8 area before it then reverses. So we can go back to our chart right now and then look at what to expect, the kind of reversal formation we are expecting. So I'm going to say the 127.2 and 161.8 right there. And then that means that even if you go to the lower time frame and you get to see the RSI giving you buy or the divergence giving you a divergence signal, you don't want to disturb yourself because you understand price action better than those that are just trading purely on indicators. So we go to the 1 hour time frame right now, and then we try to draw the price action. I can take out this because we already understood where price should get to the 127.2 and 161.8. So with this, what we need to do is to draw the price action on the Euro USD. We have this, price have actually been respecting this line right there, and then we also have this. So what we could see on the dollar index is possibly what may happen right here. Price may come down all the way to this point, then reverses. Those people that doesn't understand how to trade very well will have drawn a support level around here, and they will tell you that price was going up, it tested it, it rejected it, now it's testing it, it's supposed to. No, that's not how to trade. You need to understand the structure first before you even draw those levels. So if you understand this, then you want to even look for a sell entry when price has gotten to this area, because you know that there's a possibility that the structure is not yet complete. So we can have this price coming all the way down here when market opens tomorrow, then coming all the way up, rejecting at this level around here, then coming all the way down again before you can then start looking out for your reversal formation. So if I want to take this trade right now by tomorrow, I will be willing for price, because before I wake up and want to start trading, this may have happened. Then price going all the way to this one. So I'm not going to be looking for doing this one that I just draw right there. No, the one that I want to do right now is this, the one that gets to this area, then start giving me a rejection candlestick formation around here. Then I can take it for the possibility of price going all the way down to the 127.2 or 161.8. And as at that time, it can be giving you something that looks like the inverse shoulder, edge shoulder pattern for the reversal formation. But all you just need to do is to understand the fact that there's a possibility of Euro USD reversing, and we are going to first be selling it. I'll first be selling it. Then when it gets to the 161.8, I want to be looking for my buy setup around that spot. The 161.8, let's say we have a confluence of that level based on support and resistance. You can see without me even first drawing the support and resistance, by applying my Fibonacci 161.8, I can already identify that price may most likely be rejecting around that area. You can see that it is an area where price has actually been respecting all along. If I keep on scrolling by the side, you see that price was actually respecting that zone. So it confluences exactly with the 161.8, and that is where I want to be looking out for a possibility of a deep correction from that spot, a deep correction from this high up to this low. That means price may most likely get here and then coming all the way down to this level. The same thing is what you should expect in GDP USD. GDP USD, let's go to the 1 hour time frame, and then let me just try to clear all this. So the 4 hour time frame first, GDP USD. So I'm going to be, GDP USD actually moved quite much more than Euro USD, and I was even happy that period, that last week, was just pouring like crazy. So you take it from this low to this high, and then it's already at the 127.2%, but there's a possibility of it getting to the 161.8%. If you scroll back, you can see it even look as if we find ourselves a very key support line where price may most likely be respected. Look at how price respected that zone. So the way to trade this will possibly be this. That means price first pulling back, giving you a reversal formation around it. So if you see that price is actually doing something like this, the price is actually doing something like, no, this is not what I want to select. This one, and then change this color. So the price is actually doing something like this. Then you want to look for that sell around here that may take you all the way down to this 161.8, which is because of this structure that you can see on the dollar index right here, that there's a possibility of price still going upwards before it then flushes down. So we've been able to talk about the dollar index, the Euro USD, and the GDP USD. The next one we want to look at is crude oil. Then we use this to have an understanding of what to expect in USD card and GDP card. Crude oil. Crude oil is here. Okay. This one is good. So our review of crude oil was that we're expecting a pullback. we're expecting that it did this pullback, but this pullback was not enough. So I was expecting that price is going to be doing a proper pullback. We've not gotten that pullback yet. I was expecting something like this and something like this. So I was expecting that price is going to be doing this, even if it wants to go up. If it wants to go up, it's supposed to, now we have an impulse, then maybe it's going to give a three-way correction, then continue from there. So based on my experience so far, if I see this kind of structure, I want to be careful trading. The first is that we have what looks as if price is going to be breaking above this level. The reason is because there is an inverse header pattern. I sent this to you guys. So it means that if price breaks above this level upwards, if it breaks above it, then USD CAD is going to just continue bearish. But if that doesn't happen and it does this pullback right here, then there's a possibility that on USD CAD you're going to be having it going upwards. So if you are going to be asking what my take is on this, I think I would prefer it to first come down here, and it's going to be giving me something that looks like the sharp pattern formation, which is the X, not that one, which is the XABC, then giving me something like this. If I get to see this, then it means I want to look at the possibility of crude oil getting strong from that point. So based on this formation right now, we can go to the, okay, there's another thing. Let me go to the 1 hour time frame to be clearer. Now, if price is going to be breaking the top as a full Smith, don't let me use that term, chess terminology. If price is going to be breaking the top as just to trick people into making it look as if it has resumed bullish, this is what you may experience. Prices may most likely break the top up to the 161.8 right here, then still coming down. So as of now, it has broken the top of this one and has gotten to the 127.2. You can see that it got to the 127.2, then did this. Now, my concern right now is because of this candlestick that I can see right here, this one. It's giving me, it's bringing the confusion in such a way that is making it look as if there's a rejection around that spot. So if price eventually still come all the way into the territory of this week, then it means that we are going to be having that proper pullback that we are looking for. So I'll take that one to 161.8. Then I'm also going to be drawing this from this high to this low, and I'm going to be setting the 161.8 also right here. So if it's going to be breaking this top and flushing down, then we should be looking at it doing that and around that spot. So that means maybe having something that looks like this. Where is this annotation? Something that looks like this. Something like this. Then eventually coming all the way down to this point, giving us that proper harmonic pattern formation. So let's go to the USD CAD and then try to see how we are going to trade it. US dollar CAD, and this is where we are on US dollar CAD. Remember that on the crude oil chart that we're expecting it to pull back. If we're expecting it to pull back, there are two things. Is either it breaks the top on crude oil, then goes down. So we are going to be looking for the reverse on this what do you call it, US dollar CAD. So price have actually done this movement to the upside, which was what we experienced over the period. Then now it's moving sideways. So that's how you're going to be analyzing it. Then with this, you can then look at the possibility of price first going all the way to this area. Then when US dollar, when crude oil is doing the break to the upside, you can expect that US dollar CAD is going to be coming down here. Then when the crude oil is actually going to be doing the proper down, then you can expect the US dollar CAD to then move upwards at that point. So my take on this is that price is most likely going to reject this area first, come all the way down here. If it comes all the way down here, then I'll be very glad to take this setup, because clearly it's going to be giving me something like this harmonic pattern. Then I'll be looking forward to taking that buy setup to the upside. So what we want to look at next is GDP card. Sorry, just give me 1 minute. 1 minute, please. I just started it now. So, like I said before, we'll be looking out for a possibility of price rejecting this area, coming down here. If we get to see this, then we want to be looking for that buy setup. Now, the overall long-term trend of USD card is this. Let's go to the 4-hour time frame so that we can understand the structure better. Look at the structure. We seem to be having a correction, an ABC correction pattern. And the reason for that is quite simple. I will reduce this so you understand it better. Price made this, then made a correction, then made this, then after that is doing this three-wave correction, possibly all the way to this area, then continue in the direction of the trend. If I take you to the Elliott wave counts, let me take you to the Elliott wave counts right here. Elliott wave counts of US dollar card. US dollar card. Okay, yeah. Okay, so this is where we are on the. This is the weekly time frame. The overall setup for the US dollar card is an ABC after the price have gotten to the wave 5 right here. Now, the interesting part is that this wave 5 that you see right here was in 2016. And I gave a sell setup around there. And I won't lie to you, that was my first real trade idea on TradingView back in 2016. And you can imagine, I don't even really know how to do much wave count, but I was able to predict that this level is where price is supposed to reject and sell. This is January 10, 2016. And we had 1, 2, 3, 4, 5, and price respected the ABC. But that is not where we are. It has moved from that point onwards right there. So you will see what happened eventually. Price made that ABC correction, that is the A, then made the correction B, then got to the C level before we then have that continuation. So I've been following up on the US dollar card since 2016. So I can tell you categorically what is supposed to happen going forward. So right here, we are still in a correct shape pattern right now. But the overall trade setup is that after price have broken out from this diagonal, this sideways movement, it is then supposed to go down. The reason is because we have had the 1, 2, 3, 4, 5, and then we are having our A, B, and C. So if you go to the daily time frame, the trade count there will be quite much more than what we have on the weekly time frame. So you can see I had my projection right there. We have had the wave 1, the wave 2, and this most likely look like we are within wave 3, and the wave 3 is not completed yet. It's supposed to get to somewhere around here before we then have something like this for the wave 4, where the overall structure may look like a shoulder head shoulder pattern right here, and price then flushing down. But that is not where our concern right now. Our concern is the immediate move that we want to experience in the market. So we go to the 4-hour time frame and try to understand where we are. So this is where we are right now. Let me just move this quite a little. So this is where we are right now. Price have done this. Price have done this. 1, 2, 3, then 4. And I think within the 4, we are going to be having a true wave correction up to this level before it then come all the way down here, giving us the whole move for wave 3 before we then have a proper rejection and then flushing down. Now, that may not exactly go just I have said. So as time goes on, we are going to be looking at what price has done and then what we expect it to eventually do. So this is where we are. Price is doing this, then we are expecting it to do something like this, then come down from that spot. So on our MT4, this is where we are, and we drill this. We drill this right here, and we also drill this right here. And it looks more likely that price is moving just the way and manner that we saw in the dollar index. The dollar index chart, it looks as if we are having something quite similar to it, something quite similar, something like this. So I am saying that there's a possibility that price only just breaks above it, come all the way down here, giving me that sharp pattern formation, then going upward. So if you have the trading skills of taking this buy setup to this level, you can. But in my own case, I will first like it to break above this level, get to somewhere around here. Then I can look forward to taking the sell up to this point, then taking the buy from that level. GDP card. There's GDP card right here. So the pattern of the structure on GDP card is even quite easy for us to trade. Price made this correction. Now, in the previous webinar, I was expecting that price is going to be breaking above this level quite well. That's somewhere around here, then coming all the way down. But that didn't happen. It just slightly got to around this area, then flushed down. So immediately it flushed down. I took a little sell around here. Then I closed it around here. I missed out from this one a little. But what I can see right now is that we seem to be having, let me plug in my harmonic pattern and see if we have an harmonic formation. Well, I can see the harmonic formation quite there even before closing exactly. So we have the harmonic pattern right here. One is here, ending around here. The second one is ending around here. So it looks most likely that price is going to be rejecting around this area upward. So at any time that you see that USD card wants to start going up, then we want to also look at the possibility of GDP card going up. So the formation of USD card right now is that we have something that looks like this. And we are expecting price to first come down a little, then go up. So it looks as if that's what we may also get right here. Price may get to this area when USD card is selling. Then when by the time USD card wants to start going up, we should be looking forward to buying it from that spot also. That means that we are going to be expecting card weakness after price has gotten to this level. So I'm going to switch away from this and I'm going to try to understand the price action better. Take my Fibonacci from this low to this high. And then my proper rejection area should be at the 127.2 and 161.8%. This 161.8 right here. I'm going to set the alarm so that when price gets there, I want to take the trade. But let's see if we can get to take the trade to the downside on the lower time frame. But how many pips is that? Maybe we don't even need to disturb ourselves much. It's around 100 pips. We may just take it. Let's go to the 15-minute time frame and see. So you can see that the indicator on the 15-minute time frame, the divergence, is giving you an indicator that price wants to start reversing. But we are not going to be going without reversing because this is not giving us a reversal formation yet. So if you have bought the divergence indicator, this is how you are going to be using it for those that have the divergence indicator. After it has given you a signal, you need to watch out for the structure and then be able to know if price is going to be respecting that level or not. For me, I'm going to be expecting this. That means price coming all the way down here, then doing something like this, two-way move, then coming all the way down here, then reversing. So that's what you should be watching out for. Price may first come down here. You don't quickly take a buy sell. There's no reversal formation here yet. It has not yet completed. The two reversal formation you should be anticipating is the ending diagonal structure, something that may look like this, in which case price may come all the way down here, then go up, then come all the way down here before it then reverses. Or the inverse shoulder pattern that I just explained to you. That means price doing something like this. pricing something like this, coming all the way down here, reversing, coming up, then going up from that spot. So if we get to see this, if price comes here and start rejecting around this zone on Monday or Tuesday, then you want to be looking for yourself for this last swing before the proper reversal in the completion of the harmonic pattern that we can see on the 4 hours time frame. This harmonic pattern that we can see on the 4 hours time frame. So the next one we want to look at is the yen. For the yen pairs, we are going to go to our trading view and look at the yen index. Then we'll go to Euro JPY and GBP JPY to have an understanding of what to expect in the coming week. So as usual, we're going to start from the weekly time frame, then we come back to the hour time frame later on. So the setup here is this. Price it a 1, 2, 3, 4, 5, then it's making a big correction, A, B, and C. But we are not in that big correction yet. We are in a lower correction. That means price is making an A, B, C. That means A, B, and C. So there's a possibility that yen is going to be weak later on. But this one is a weekly time frame. Let's go to the daily time frame and the 4 hour time frame so that we'll know the immediate expectation of the yen index. So on the daily time frame, this is what we have seen. Price move up here, and it looks something as if we are in a corrective manner. That means price is moving sideways. Then we may eventually either go up to complete that move right here, or if we have a proper reversal formation around this point, then we want to look at the possibility of it breaking beyond this level. So it is not clear yet too. I'm going to go to the 4 hour time frame and possibly have a good understanding. Okay, so on the 4 hour time frame, this one is a bit clear, and you can see that we have a 3-wave correction. Then after that, price did something like this: 1, 2, 3, making another 1, 2, 3. Then there's a possibility of another 1, 2, 3 downward. The the last one, it may not be 3, it may be 5. That this is 1, 2, 3, 1, 2, 3, then 1, 2, 3, then the last one may be 1, 2, 3, 4, 5. Why is this so? If you go to the this Elliott wave theory course, you'll be able to see the corrective wave pattern, regular flat. The regular flat, simple correction pattern, so to say. The regular flat and then the running flat and all that. Expanded flat. But I think we are going to be having the regular flat right there. So the formation of the regular flat, let me quickly just zoom this more so that you see that price, we are not just saying all this. Everything is there in the market. You just need to have the idea. You can see that I said 1, 2, 3, 1, 2, 3, then 1, 2, 3, 4, 5 within that correction pattern, which is exactly what we are going to be looking out for as that yen pair. So let's go back to the yen. Don't play, bro. Let's go back to the yen and let's see exactly what we are looking out for here. So price have done this, and it has done the 1, 2, 3. So we are setting the 1, 2, 3 to this upside. That means yen is supposed to be strong for some time. Then after that, we can have this correction to the downside. And if you combine it with Elliott wave, it's something that you can even see that it looks as if we are going to be having an harmonic pattern when it is completed before it gets the move to the upside. So with this right now, I think we expect some more bullish trend in the yen pair getting to somewhere around this zone before it then comes down. So I'm going to go to the MT4 and then look at the Euro JPY and GBP JPY. Let's first start with the GBP JPY. So if you see what has happened so far in the yen, then you'll be able to understand why this flush to the downside happened. And I even gave you guys this setup back then that you should be looking out for your entry around this area. Price made this move to the downside, then we had a shoulder, head, shoulder pattern right here. It broke the neckline and came down. After breaking the neckline, it came back to retest the neckline and then came down again. So you should expect something similar right now. Look at what price did here. It's what you may most likely be getting here also. That means price may do something like this, then coming all the way down again. And you don't want to miss out from that spot. So for me, if I want to be taking this trade, I don't want to look for this buy yet. I think for this week, I'm not really going to be actively trading on Monday and Tuesday because this formation needs to be completed yet before you can. But I will still be observing the market. This is where I want to be looking out for my next continuation because I could see that the formation on the dollar index, on the yen index, shows that we have done the one prices within the two, and it's possibly going to go for the top weight before we have the 1, 2, 3, 4, 5 downwards. So with this one right now shows strength in the yen index, and that strength means that we are going to be having this final push to the downside. So by the time this one is happening on the yen index, that's when you can start having this reversal to the upside. So you may have something that looks like this, then price giving you this kind of formation before it then floats down. But this is just a long-term outlook. We don't want to focus on that yet. What we want to look at right now is how to enter the trade, and we need to wait for this correction pattern for us to add to the sell. And if you want to start applying your Fibonacci, it's just the same way that I've explained to you before. Look at this. Price came all the way down here, then it went up. What you just need to do is just to take it. You can see that there's a price geometrical relationship between the first swing and this last swing. Now, this something similar is also something that we have right here. So all you just need to do right now is to look at the overall swing that price has made. Price made this overall. This is the wave 1. Then after that, it made this pullback. This is wave 2. And it's supposed to make this third wave 3. Now, I'm not saying that it's wave 1, wave 2, wave 3. I'm just talking about the swing. In this, it may actually look like an ABC formation. That's a zigzag formation, where you have this 1, 2, 3, 4, 5 to be the A, correction to be the B, then price making the 1, 2, 3, making the 4, then expecting to go for the Y, giving you the C. So I'm going to draw my Fibonacci retracement level from this low to this high, and I'm going to be marking the 127.2, which is where you see that price goes to and then started reversing. It's most likely going to be pulling back around this point. Then those that used to trade just basically on support and resistance, they are going to be buying around here without understanding the structure. So price may go in a favor only for it to then drop against them too. So you need to focus on the overall structure and anticipate that there's a possibility of price getting to this 161.8, where you may most likely have your final destination. I'm trying to go back to see if we have a very good level. We can even draw this the overall last string, but I don't see the possibility of price getting to this last string right there. We may most likely be reversing around the 161.8 Fibonacci extension level. So let's go to Euro JPY. So the same structure that you have right there was also what happened in the Euro JPY. We have this price getting here. So you have the head shoulder pattern. It broke the neckline level, came back to retest it, then started coming down. So we are going to apply the Fibonacci retracement tool from this low to this high, and then we are going to be marking the 161.8%. The 161.8%, and even if you draw your line from this area and extrapolate it, you will get to see that it confluences exactly with the place where we add the 161.8% extension. So how are you going to be taking this trade? Well, we expect that there may be a pullback when price opens on Monday, or we pray that there's a pullback. Now, there may not be a pullback immediately. The pullback may actually be happening somewhere around here. Can you guys see my chart at all? I don't know if I'm still there because my second system just went out. Please confirm if you can see my screen so that I can recollect the second one. Okay, just give me just give me like 1 minute. Let me try to reconnect a second because I need to be looking at the second screen to know what is happening out there. Hold on 1 minute. Just resume it and then we can continue. Let's continue. So we should not be looking at buying it from this point yet. We can if you want to, but it's going to be a very risky trade. I won't lie to you. It's going to be a very risky trade. So let's try to see how many pips is going to be. That's from this 127.2 all the way down here, about 100 pips. So it's something that you may be able to. So if you want to take that trade, we just need to then use our trend line to act as a guide. We use our trend line to act as a guide, and we are going to be drawing this. We're going to be drawing this on the lower time frame. We're going to be drawing this. So if you go to your 15-minute time frame, it used to be clearer, as you can see. So if you want to be taking that buy when it happens, draw your trend line and then wait for price to get to somewhere around here, and then start looking out for your candlestick formation around this point. As at that point, there's a possibility that the RSI is going to be giving you a divergence. Then you can look for the possibility of price giving you that good about 80 pips movement. Then when it gets here, you want to be looking out for the sell position. That means you want to be adding to your sell around this area for the next push to the downside. So the next one we want to be looking at is the Australian dollar, and then the New Zealand, and we call it AUD. Now for the Australian dollar, we are going to go to the AUD, and this one is quite simple. I'm not going to be wasting too much time on it. We have had this push to the downside. Price made this correction right here. Then we may actually have this next push to the downside. Why is this so? If you go to the daily time frame, we've discussed this before. Price is just moving slowly as what against what it's supposed to do. We expect that price is going to be retracing all the way to this level. That means giving us this correction right here. Then before we then have this bounce. So it has not gotten to the final destination yet. And so we want to, so what we're expecting right now is that the Australian dollar is going to be weak. Remember that this is a pair versus the US dollar. So if AUD chart is going down, it means that US dollar is stronger than Australian dollar. And if that is happening, then there's a possibility that euro and pound is going to be stronger versus the Australian dollar. So with that in mind, you can use that to have an expectation of what to expect in Euro USD and also in GDP, Euro AUD and GDP AUD. So we are expecting a weak Australian dollar in this week. So that means that we should be looking forward to buying the AUD USD and the Euro USD, something like this, and also the GDP AUD. The GDP AUD. Let me go to the daily time frame of GDP AUD. We explained that that we should expect a pullback for the GDP AUD up to somewhere around here. Up to somewhere around here. So it looks more likely that price is actually going to be trapped within a range before it then continues downward. So what we should be looking out for is the possibility of a reversal right here. And I think we are going to be having an harmonic pattern right now. Let's go to the 4-hour time frame. 4-hour time frame. Let me switch to my harmonic pattern and see if we have, I can actually see something that looks like a butterfly pattern or so. Okay, I think it didn't bring it, but I can see it. Sometimes the harmonic pattern is not going to be getting to see them, but if you have a good knowledge of the market, you'll be able to get to see them. So what I'm going to do right now is to take my Fibonacci from this low to this high, and the formation for the butterfly pattern, which you can have right here under the trading course, harmonic pattern course. butterfly pattern is the 78.6 and the 127.2% right here. So this is looking more like what we have on the GDP AUD price, giving something like this, and then possibly going to be reversing from that spot. So I'm going to go back to, let me just take out this. So let's go back to this, and then we'll see, I'm going to be setting the 78.6 and 112, 127.2. 78.6 and 127.2. And if you get to see that that was exactly what happened, just look at it right here. I'm going to zoom it more so that you see that prices don't just move by any, it needs to complete a formation before it then moves. This is the X, this is the A, and this is the pullback, the B, then the pullback, then the D level right here. So it has started the movement to the upside already. So let me go to the 1 hour time frame and see how we are going to be taking this trade. It has already started, and what we can hope for right now is a pullback, something like this. If we get to see this if we get to see this tomorrow, then we want to be looking at taking that trade to the upside. That means if price starts consolidating, possibly through a correction, then you want to take that trade. So I'm looking forward to buying the GDP AUD and also the Euro AUD. For the Euro AUD, the harmonic pattern I can see right there is this one. I can't see anyone right now. This is the only one I can see right now. But it looks more likely that we are in a corrective structure already in the Euro AUD right here. So you want to take this Euro AUD, you want price to possibly also come all the way down to this area. If you get to this level, then you want to look forward to buying it at that spot. Given, based on the condition that Australian US dollar is still coming down, based on the expectation of that, something like this, giving you something like this up to this level. So we'll talk about the Australian dollar. Let's go to the New Zealand. Then possibly we'll look at Bitcoin and gold and call it a day. New Zealand. Where is the New Zealand? I'm not sure it's here. Let me check here. It's not here too. Okay. Okay, I've seen the New Zealand. Yeah. So New Zealand, and let's go to the Elliott wave count of New Zealand. New Zealand US dollar right here. Okay. Start from the weekly time frame to understand where we are. Okay, I think we have completed the wave 5, and it's most likely price is going to be giving an ABC correction, and it's going to be giving us something that looks like inverse shoulder pattern to the upside. So New Zealand seems to want to gain strength, but that's the overall long term. Let's go to the daily and 4-hour time frame to know where we are. Okay, I think we have had this 1, 2, 3, 4 prices within 4, then possibly going to go for the 5, and this one is going to be the A, the B, then 5 is going to go for the C. So we can go to the 4-hour time frame right here, and then it looks more likely that price is giving us a correction pattern. It gave us this correction pattern right there too before it then broke out from that structure, and you had a harmonic pattern right here that gave you that push to the upside. So with this one right now, we are supposed to be looking, this is what we are supposed to be looking out for. Price coming all the way down here, then going upwards. So with that, we can go to the trading platform and then see where we are on the 4-hour time frame. On the 4-hour time frame, I think this is where we are right now. And price is looking more likely a correction pattern, maybe a descending triangle, something like a descending triangle, so to say. So if it does something like this, then you want to be looking out for that push to the upside for the overall wave A. And then based on that, we can use that to trade Euro New Zealand and GDP New Zealand. Euro New Zealand and GDP New Zealand. For the GDP New Zealand 4-hour time frame, we have something that looks like an harmonic pattern already that has happened. Let me see if this is going to pick it up. If it doesn't pick it up, I can already see it. It didn't pick it, but I can already see it right there. I'm going to zoom it higher so that we see the levels that I'm talking about. Now, this is also looking like the butterfly formation. The butterfly formation, this is the X, the A, the B, the C, then possibly at the 127.2. Let me confirm that from this low to this high. And I'm going to be setting the 78.6 and the 127.2 to 161.8. 127.2 to 161.8. So this is where we are right now, right here. The same butterfly pattern that we just saw on this formation, the butterfly pattern is what we are having right there. And you can see that the extension of this harmonic butterfly pattern is that price can get to the 161.8%. Where is this color? Price can get to the 161.8%. The minimum is 127.2, then the maximum is 161.8, which is what we currently have right now. This is the minimum right here, and then price rejected exactly around the 161.8. So we can go to the lower time frame and see how to trade it. Let's just go to the 15 minutes time frame straight. Okay, so this is good. Price moved to this, and then it's giving us a correction. So what we are going to do is to just pray that it gives us this move to the downside. So if you get this move to the downside, then you're having a 1, 2, 3 correction for the next push to this upside. Where are you supposed to set your targets? You're supposed to set your target around this area. The reason is because it's looking more likely that price is going to be giving you an inverse shoulder. This is the first shoulder, and this is the end, and price may most likely get here and then do a pullback before it then flush it upward. So we are saying that with this formation, you should be getting something close to about 125 pips before this pushback and then going forward. Euro New Zealand, very similar structure we should be seeing there. The Euro New Zealand, remember that we are expecting that New Zealand is going to be strong, but for the meantime, it's going to press the weak. So with this right now, what I can see, there are two formations I can see right here. The other price gets to this area. If it gets to this area, it will be very good for you to buy it. Alternatively, if it starts giving you a consolidation around here and refuses to break below this level, then you want to take it from that spot because of this structure that we can see right here. So Euro New Zealand 2, I'll be looking forward to buying either from this spot or from this area. Then which other one? Australian JPY. The same structure that we have on AJ is what we should be expecting we had on AU is what we'll be expecting on AJ. Remember that yen is supposed to first be strong for the time when Euro JPY and GT JPY are going down. So it may get here. Then by the time they are pulling back, that is when Euro JPY and GT JPY start reversing. Then you want to look at the possibility of also buying the Australian yen. Then let's go to gold. Now, gold, I've not been trading gold for about 2 months now. I've just decided to just go away completely from that pair because it has been standing up, remaining up for quite a long time, and it's refusing to come down. And I'm interested in the sell. I'm not really interested in the buy for now. But this, somebody asked me about Euro GDP. The reverse of what you have on GDP USD is what you are supposed to be looking out for in Euro GDP. That's why I don't trade Euro GDP because I trade GDP USD. So still going to trade Euro GDP is going to be quite exposing me to pounds. But let's quickly see if we can look at what Euro GDP is. Euro GDP. So you see that we are going to be having exactly the reverse of the structure that we have on GDP USD. So if you remember that on the GDP USD, we are having a divergence for a buy signal on GDP USD. Look at what you have here on Euro GDP. It's giving you a reversal for a sell signal. So once you're able to understand GDP USD, you just need to use that understanding for your Euro GDP. Price have made this move to the upside, then we seem to be having a correction around here. Price broke out. You have the inverse shoulder pattern. It break out from this structure. But what I could see right now is that there's a possibility of it retesting. There's a possibility of it retesting this zone that it broke out, then going upward. So as at the time that GDP USD keep on going down, you should expect Euro GDP to then go up in that manner. So gold. For gold, we have a divergence that formed even on the weekly time frame, and gold is still looking forward to some more uptrend. As you can see, the weekly candle for last week even shows more bullish. So let's go to the daily time frame. Let's first go to the Elliott wave counts of gold, and you can see that we are in overall. We see where price is supposed to sell off, and then it is still not selling yet. Gold, we are going to go to the weekly time frame. So we are in overall we see, and it looks as if it has one more last swing to make before price eventually start flushing down. So the only time that I see the gold really selling is when dollar index is actually strong. If dollar is strong, then that is when you should expect a sell-off from that spot. So let's go to the 4-hour time frame and possibly get to see what to expect. So right here, I can possibly see an inverse shoulder pattern forming right here that you can see, and this seems to be the neckline. So if it breaks above this area, this is what you should do. Don't take it yet. This structure is actually quite a confusing one. So if it breaks this level and come down here to show you a rejection, then you want to take the trade, which is where we had the kiss your mama goodbye setup. We also talk about it in the training. It should be under the price action trading course. The price action trading course for the king. Okay, the king strategy. Support become resistance, and resistance becoming support is what you have right here. So if price breaks above this level, remember that we are looking at the possibility of an ending diagonal structure on the higher time frame. That means price is most likely going to be giving us wave 1, wave 2, wave 3, wave 4, and possibly going for the wave 5 before eventually flushing down. So if that's what price wants to do, then you want to first let it break this place, come down to retest this area, then you want to take your buy up to this level, then possibly sell off from that spot. So let's go to our MT4 and see where we are on the 4-hour time frame. This is where we are on the 4-hour time frame. So how do we get into this trade? If you want to buy it, there are two instances. Either you let price break this level, come back to retest it, then look for your entry at that spot. Or you want to pray that that break doesn't happen immediately on Monday and it does something like this. If it gives you a correction around here, then you want to take that trade. But for me, right now, I have been staying out of gold and I'm still going to be staying out of gold. Then finally, Bitcoin. Do we have Bitcoin here? Let me go to this one. We have Bitcoin here. Okay, yeah. So for Bitcoin, the structure is still what we are, what has been happening so far. It has not changed. Prices have been moving quite slowly, and we expect it to come somewhere around here. Even if you want to go up, it's supposed to come somewhere around here, then go up. Otherwise, it's going to be flushing this level entirely all the way down. So for me, I'm just going to let you know that what you'll be looking out for is a sell opportunity for now on Bitcoin. Let's go to 1-hour time frame and see 4-hour time frame and see what we may possibly be having. So it looks likely that we are in a correction phase and we should be looking forward to selling it up from there. Price have done this. This is the 1 hour. Price did this 3-week correction. Then I think it's going to be break out from this level up to this area. Then, okay, it's even kind of clearer right now. Now, I'm going to be drawing these 2 lines. So this is what you should be looking out for. If price breaks above this level, then we are going up to this area, giving us this inverse shoulder pattern and a confirmation of this break from this area. Now, if price doesn't break beyond that level, that means price only broke up to this area, then reject this area completely. Then you should be looking out for the possibility of going down. But the price action on the higher time frame usually overrules whatever you're looking at on the lower time frame. So from the higher time frame, what I can see is a big corrective structure right here. So what may possibly happen is that price is doing a 3-wave correction, making this the 1, 2, 3. Then I think it's going to be 5, 3, 4. That's 1, 2, 3, 4. Then making the 5th correction before it then flushes down. So there's possibility that price come all the way down here, then come down to that spot. But it's best to be looking at the sell than the buy right now. So it's usually a 2-hour training, and I think we have been able to treat all the major pairs, and we have an understanding of what you'll be looking out for in the coming week, including crude oil, dollar index, Bitcoin, and gold. So I don't know if you have any question. Now is when you can ask questions. Any question from anybody? If you have a question, you can raise your hand, then, or you send a chat, then I can unmute you, but make sure you're not in a noisy place. Any question, guys? Okay, some people usually ask me that they don't see the price of the, they didn't see the price of the academy right there. So all you just need to do, you want to get to see the price. If you, like me now, I can access the premium video, so it's not going to show it. But if you click on subscribe to premium, then it's going to take you and you get to see the price here. The price is actually $385 lifetime access. Then if you are also part of the students, you are entitled to this trade journal. There's a trade journal where you can download and you can use it to assess your performance over the period. Okay, someone is saying, explain the early diagonal structure in a simple way. Early diagonal structure. There are little explanation I can do right here. Just go to the academy. You'll be able to get a whole lot of information about the any diagonal structure. But for the any diagonal structure, it's not just the ending diagonal structure. We have the leading diagonal and we have the ending diagonal, and they usually just look like this. This is the structure most of the time for the ending diagonal. What other question do we have here? Are there up to type wave 1, 2, 3 and 1, 2, 3, 4, 5? No, we have wave 1, 2, 3, 4, 5. There's no wave 1, 2, 3, except you want to be looking at an ABC instead of the 1, 2, 3. So I presume there are no more questions. If you have any question, you can chat me on in the group. Okay, here's the question. There's a question of can you just copy and replace the question? Can you just copy and replace the question, because I can't really get to see the flow. Is it possible that gold is on a shoulder? On what time frame are you referring to? On what time frame are you referring to the shoulder head pattern? Okay, yeah. So someone was saying that shoulder pattern on gold. I said on one time, what time frame are you looking at that? Is this person still there? So I feel there are no more questions. If there are no more questions, I wish you guys the best in this coming week. Okay, daily time frame. Let's go to the daily time frame. Gold daily time frame. Gold. Let me just go to the trading view and see because I can't see the gold right there. Gold. Okay. Okay, so you are talking of shoulder head shoulder pattern right here. Yes, I think I mentioned the fact that we may have an inverse shoulder head shoulder pattern on gold, which is something that's quite obvious. The first one is this, the overall structure right here, this one. And the second one is this, that you can see right here, this inverse shoulder head shoulder pattern right here, which is suggesting a fact that there's a possibility that gold is going to break above this level, possibly retest it and go for the final wave, this structure, before it then comes down. I hope I've been able to answer that question. Have I been able to answer the question? Okay, guys, so let's just call it a day. Let's just call it a day. This is 5, and I don't usually like it extending beyond 2 hours. So if you have further questions, you can then chat me up in the group. You guys take care and enjoy the rest of the weekend. Happy Father's Day one more time. Bye.